So I appreciate everybody that could be here. I apologize for I meant to send out an email on Friday, and I waited. I guess I didn't get it out till Monday night, and so I apologize that. But I think we had a pretty good group given my late reminder of this meeting. But as we know, cattle prices have been strong. We have seen a little bit of weakness the past couple of weeks. I don't know that that's very surprising. We've seen um, not as much of a decline in calf prices as we have in feeder cattle prices, and that's mainly it's been more on the future side than in the cash price. But the faltering of the futures market has resulted in a slowdown and a slightly lower price for calves moving through weekly auction markets. Heifer retention has been slow and will continue to be slow, and I'll briefly discuss that and kind of relate that into what we've seen in the January 1 cattle inventory report. And just remember that you have a lot of producers out there that if they are stocker operators, they've got a lot of money invested in these cattle, a lot more money invested in these cattle than they've ever had invested. And so when we're working with those folks, we may be finding some of these people under a little bit of financial stress, not necessarily from the standpoint that they're losing money, but just the fact that some of these guys, to keep operating at the levels they've been operating at, they may have to borrow more money, which, just in general, the idea of borrowing money is a stressful situation, especially if you start extending your limits of what you're comfortable with. And at the same time, those same guys are being squeezed uh, from a margin standpoint because a few years ago they might have been paying $1,000 a calf and getting a $200 head return. Now they're paying $2,500 a calf and still just getting a $200 return, which means their return on investment is very, very poor relative to what it had been. We started the year really, really strong with slaughter cattle prices. Essentially set a record a few weeks ago, and since then we've declined on to a touch. How long will that decline last? I don't know. Just realize that it wasn't too long ago that a lot of our producers would have been tickled selling a 500-pound steer for $2.50, and we nearly hit that on a 1,500-pound steer. For those going through, coming out of the feedlot. So we're just in a totally different market than what we've ever been in, and it started last year, and it's going to continue through most of this year. I do expect all these prices to remain elevated. To what level, I don't know. I mean, in reality, we can look at these 5 to 6 weight steer prices, and here we are trading around 460. You know, most of your producers, your cow calf producers, they're just rolling in lots of money, which means there should be some tax planning already going on for 2026. A lot of those guys are in a situation where they're going to have to pay quite a bit of taxes on 2025, or they went out there and bought a bunch of stuff that maybe they did or didn't need. And so those are things to be thinking about. But some of your guys, as they talk with y'all, go ahead and be preparing them to be thinking about where they can spend their money wisely to improve their operation, so that for the long term, it provides them longer term profitability than just focusing on this year and needing to buy a new tractor or a new truck or whatever it is that just keeps them from paying taxes. I think there are some infrastructure things that a lot of our people could invest in that would save them time and money moving forward, that would save on taxes in the near term as well. But even if we lost a dollar a pound, so $100 a hundredweight, and we're down at 350 or so on these calf prices, that is still a very, very strong price for our producers. Even if you took it all the way back down to 250 on a 5 weight, that's still $1,250 a head. So at 350, we'd be looking at nearly $1,800 for those animals, and I think most of our guys would still be making really, really good money at that level. And if they're not, there's something else that needs to be considered and looked at, because uh, if they're not making money at 250 or 350 per hundredweight on a 5 weight, then there's some challenges that need to be addressed that aren't necessarily associated with prices. Same way with 7 to 8 weight cattle. Some of y'all have people that sell 7 to 8 weight cattle. Most of them are going to be load lots, so most of them are going to be your the folks that you have that background their own cattle, or that stocker and background purchase cattle. Those prices have remained strong. I did notice some load lots this week of all black cattle that it sold that the prices have softened considerably on those animals, which in reality, that's not really uncommon for March. It's very common for me to hear people that are in the stocker and backgrounding business talk about how the cattle they sell in February and March, sometimes into early April, just don't ever make any money. And I guess my question is why do you keep buying cattle to sell in February, March, and April then? Uh, I mean, I do realize there are reasons to do that, but we do tend to see a softer market for yearling type cattle this time of year, and a lot of that has to do with when those cattle come off a feed, which is typically in a time period when beef demand and beef prices are a lot softer. So you think about late summer, early fall time period, and that's just not a time when beef demand is going and blowing. This is a market. The slaughter cow market is a strong one. I just read an article from Josh Maples out of Mississippi State and David Anderson out of Texas A&M, and they had a little article talking about these strong prices and kind of delineate the basics of why they're so strong. Of course, it's nothing that we didn't already know, but we have a really strong demand for ground beef. Our country lives on ground beef because of its versatility as a product, and this is one of our primary sources of domestic lean grinding beef. The other would be the trimmings from finished cattle. Otherwise, we import it, and this is going to remain strong. Dairy cow slaughter has started to increase, which will soften these prices slightly just because of dairy cow slaughter increasing. But I don't expect dairy cow slaughter to just keep on increasing and increasing, mainly because even though milk may not be the most profitable business today, selling 3 to 7 day old calves for $1,000 to $1,500 in that range is pretty profitable. So I do expect that a lot of those dairy cows will still stay at home just because of that market alone. But I do expect these slaughter cow prices to remain elevated. I do think that most of your producers should maintain their normal culling practices. Don't try to just hold on to that cow for another year to get another calf just because calf prices are high. Because let's be honest, if that cow dies, I mean she's worth a lot of money herself right now, 22, 23, $2,400 on an animal like on this. So don't miss out on that just because you think one more calf is the way to go. This is really important. So far this year, so the first 2 months of the year, heifer slaughter is down nearly 6%, but steer slaughter is down nearly 8%, and beef cow slaughter is down 15%. Now, what's odd about that is if we were really retaining heifers, we would expect heifer slaughter to be down more than steer slaughter because we realize that steers only have one way to go. So when we think of it from that standpoint, it's really tough to it's really tough to imagine why we keep sending heifers to slaughter. But I think there's a very simple explanation for it in reality. I realize we want to just look at market prices, market prices, market prices, but basic production is really what impacts this. And I think a lot of that has to do with the droughts that we see. We like this fall, we saw tremendous drought across most of the U.S. And actually, in our part of the world, in the southeast, the past 3 consecutive late summers and falls have been riddled with drought. And when people are weaning, the primary time to wean calves is in the fall. And given that when somebody's in a drought situation, the last thing that they're thinking about is retaining more and more females, regardless of what the price is, because they physically don't have the feed resources to feed those animals. So I think we just have continued to see more and more females. I know there's a lot of people that will say, well, it's the aging farmer and they're just getting out. I'm not saying it's not that or it's, urban encroachment or development. Maybe some of those things are influencing that, but I don't think that's the biggest thing. I think it has more to do with just simple production of things like drought that keep us from being able to actually do the things we want to do based off what market prices say we can do. But anyway, beef cow slaughter is down 15%. That's why those prices continue to be supported for those slaughter cows, and I think they'll continue to do so. So far this year, beef production is down 4.5%, pork production's up 2%, and broiler production up 3.5%. Uh, it's amazing that beef production is only down 4.5%, given how large the declines in slaughter are. But all that decline in slaughter has been offset with just heavier weights. We just continue to grow these animals larger and larger and larger and larger. And as I've said in many meetings previously, when I started this job, goodness gracious, it's been 14 years. Uh, the average live weight of a finished steer was 12 to 1,250 pounds. Now it's 1,500 to 1,550 pounds. So we've added 300 pounds of live weight over the past 14 years, and a lot of that's come in the past 4 or 5 years. And we're just going to continue to push those animals as far as we can because we don't have enough of those animals. That's also contributed, the fact that we're feeding them longer has actually contributed to more cattle grading choice and prime than what we've seen in previous years, which is what our customer wants, is a high quality product. Imports are going to remain elevated. This is all of last year's imports. We're going to continue to see more and more imports of this lean grinding beef that we need because of the demand for ground beef. That's what we're importing primarily, are things to mix with the fat. As we grow these animals bigger in the feedlot, we have more fat, and so thus we need more lean grinding beef. And then that actually adds value to the fat that we're growing in this country. So, despite people thinking that imports are a bad thing in some instances, those imports of lean grinding beef actually add value to the finished cattle that we produce here domestically because it adds value to the fat. And so that fat that was purchased for the same price as the lean meat on a finished animal, instead of it going to just tallow, all of a sudden you mix it with lean grinding beef, and instead of it being a $3 product, you can now sell it for $7 a pound. So, that's the kind of things that we're looking at there. Exports have declined considerably. They're going to continue to be low relative to a year ago. We'll see further declines in exports this year just because of how high beef prices are and how little beef we're producing relative to what we have produced in the past. So you produce less of it and price goes higher, you're going to typically export less of it. But Japan, South Korea, Mexico, Canada, those are our primary export markets. They're going to continue to be fairly strong markets, just like our import markets being Australia, New Zealand, Brazil. Of course, the president of the United States has increased the quota from Argentina, and so that's what we'll see there. Uh, in 2025, we set new record prices on all cattle prices. Now, we didn't set a record on box beef prices, and that's strictly because there was a single week during coronavirus, which, if y'all remember, would have been about 6 years ago right now. Uh, we had one week in which box beef prices skyrocketed to something like 450 something or 460 something. I don't remember the exact dollar value, but we didn't come anywhere close to setting a new record. But if you took that one single week out, we did set a new record for box beef prices. And we've started to see those prices have been really flat for probably 2.5, 3 months, and maybe 4 months in reality. But we started to see an uptick 3 weeks ago, and I don't know. In my weekly comments, I've tried to allude to some things that I think might be causing that, and I do think that a lot of it may be retailers and food service people buying earlier in fear of, because a lot of times they start most of your buying for the summer grilling season and for that time period of demand, that strong demand, is generally in April, and generally starts about the midpoint of April. And I really think some of these people are already trying to stock up a little earlier in fear that beef prices could just skyrocket when that April, early May time period comes. And so they're trying to get some beef in stock prior to the real strong run up in prices. Now, I don't know. I can't guarantee that. I don't have any insider information because I hadn't talked to anybody lately about it. But I do think that might be what's happening there. This does show our current drought situation. We will actually get an updated chart tomorrow. There's supposed to be some storms come through much of the state today. I know in Middle Tennessee they're talking about an inch to inch and a half rain, but for at least in my part of the country, we are terribly dry. We've been dry all fall, all winter, and it's not a good way heading into spring to be this dry, especially from a crop standpoint. You know, it might impact some of our early forage growth. We've had some really warm temperatures that have really essentially kept people from having to feed as much hay. I'd say many of y'all have producers that have slowed down on feeding hay just because of forage, which is a great thing because forage production, the warmth has done that, and we've had just enough moisture uh, to get forage to grow. But if we don't have some considerable rainfall in the next few weeks, it's going to make it for a struggle for crops and for forage. But this is another reason right here. You just look at how much of this country, where and most of these places have a lot of cattle, and it's really hard to retain heifers when the drought situation looks like it does right there. Corn prices have been fairly flat. That we have, as Tori mentioned, we saw a slow uptick in those corn prices the past few weeks. Same way with soybean prices. But I don't know that we're going to see some just skyrocketing of corn prices anytime soon. It's going to just keep feed prices low. So that's where, if we look at Kansas feedlot data for cattle that came off of feed in January, we were about a dollar and a penny per pound of gain. That's a really cheap cost of gain in the feedlot. So there is an opportunity to feed cattle. The market is paying your producers to put weight on these cattle, not necessarily finish them out at 1,500 pounds, but the market is paying your producers to finish cattle. But yet, what I've noticed in my purchasing is that a lot of people are selling cattle lighter and earlier, and I don't know if that's to capture the bird in hand instead of the two in the bush. But in reality, we have a bird in hand and a bird in the bush, so I don't know why we wouldn't go after both of them. Um, and so just add weight is a good decision for most producers. I'm not saying that's the right decision for everybody, but if you have producers asking, "Hey, should we keep these calves or should we just sell them?" Well, right now the market says just keep those calves. But some people that's not their direction. So really, whatever they want to do. All right, let's kind of finish up with this cattle inventory stuff. The beef cow inventory was down 1% compared to last year to 27.6 million head. The dairy herd was up 2%. That's actually a pretty big increase relative. It's been a flat market or flat cattle herd size for a long time, but that beef on dairy cross calf does retain some more of those animals. Now this is the number that we kind of keep an eye on as far as are we retaining heifers, and so really what we need to see, this is heifers on feed as a percent of total cattle on feed. So if we saw two steers to every one heifer, that means that 33%, this would have a 33% rate. Well, right now we're well above that. And if we want to see heifer retention, we're going to have to see this number down in that around that 1/3 of the cattle on feed will be heifers and 2/3 of the cattle on feed will be steers, because we all know all the steers go there and only a percentage of the heifers are going to go there because some of them will stay at home for breeding. But right now we keep kicking these heifers into the feedlots, and so we're going to have to see this value decline at some point down to that into that 33% range uh, to know that we're actually retaining heifers to put back in the breeding herd. Slight increase in heifers held as beef cow replacements in 2025 relative to 2024. Uh, so, I mean, that's the 2026 inventory, but in reality, they were held in 2025. Uh, just I mean, we're not retaining any heifers right now. Just has not happened. And it won't happen until this fall at least. Uh, Here is the March feeder cattle futures market. We've had some strength, and then we did falter when the war in Iran, or not the war, the conflict or the bombing or whatever we want to call it. Uh, we'll see how this plays out. There's just a lot of volatility in the market, as Tori mentioned, uncertainty breeds a lot of volatility and also tends to make a market bearish. But here's kind of the overall of what they closed at yesterday. The market will already will be close to opening now, but all those numbers were green from the day before. But that those prices are a lot softer than what we have seen recently. There's kind of the where I think we are on prices. We'll see how that plays out. And with that, I don't want to belabor it anymore. I do think we have 3 more years of strong prices. Strong prices don't mean they're going to stay at the levels they are now, but like I said, if they decline to $100 a hundredweight, we'd still have strong prices. But I think our cow calf producers are going to be really profitable the next few years.